Hi there folks, this is Anne-Marie from Anne-Marie Trades on the StockTwits Network. You can find me at www.annemarietrades.com, or you might email me directly should you have questions at annemarieb2001@gmail.com. What I'd like to do is a little mini, a couple of minutes on candlesticks. I did some things a while back and I've had a lot of folks go, wow, yeah, can you tell me more about candlesticks? I don't use candlesticks in really fancy ways. I use them in really simple ways, and I use them in combination with Fibonacci's because that's just how I like to trade. And what I'd like to do is show you a little bit about how you can tell congestion and breakout levels based on indecision of candlesticks. So let me start with that very, very quickly and let you realize that when a stock begins to have a very tight range, like it did today here in EWC, it means that it really can't go there forever. So at some juncture, it's going to either pop down or pop out, and it might do a combination of both. And the way you can use your Fibonacci's is by when it pops out, if it comes near a level, then you can move appropriately according to whatever rules you have associated with trading Fibonacci's. However, what's important to notice is the candlestick themselves. Wow, I don't like that. Let's do that. Candlesticks themselves. When an open and a close are very close together, it means that all the business that means anything is actually being done in a very, very tight range. A lot of times people just ignore the tails or the wicks of the candle. For me, I look at them both. However, it's important to realize that the open and the close of a candle are extremely important in order to decide who is winning the battle. If the open is above the close, we know that the bears came in and pushed the bulls down. If we close above the open, it means the bulls have come in and pushed the bears up. Now, something that's very important to notice are these tails. Tails show indecision also when they are opposing. That means we've got some pull to the downside, we've got some push to the upside. That way, you know that something is going on. They can't really decide which way they're going. However, if you have Fibonacci's in there, which, I spend a lot of time with Fibonacci's, you can use these bounce levels, the rejection of that level of 76, 72 to actually go short and put yourself in a better space than someone who is just looking at candles, or perhaps not considering that opposing tails might be showing something more just than indecision. And they usually are based on the things around them. Something else we can look at is it's always very, very important to watch volume in these kinds of places, because like I always say, when you see a stock in a tight channel like this, it's sort of building pent-up energy. So it's going to move, usually violently, comparatively, in one direction or another. And in this case, it did both. This candle is 3 times the size of that candle, and maybe 4 or 5 times the size of that candle. Relatively, it's a violent move. And it pulls all the way down back into this area, which, wow, is in between those two levels before bouncing back up and then getting into the channel and shooting right back out there again. This channel provides a jumping spot either down or up. And if you can isolate these channels, you can really, really prepare for where a stock is going.